Hello. Today I want to go through the news trading strategy that works with CPI, PPI, and also the jobs report. Those are the three major news events that the whole market is looking at for the past month, and you get extreme volatility every time this news or this data comes out. And of course, you can capitalize on this since you know that some volatility is going to kick into the market. Now, it's a bit difficult to trade because of the way how price action happens and because of market makers. They know a lot of people are opening big trades during these events, and usually they try to take them out. Now, most people either open a long or a short. They flip a coin, or based on technical analysis, they place some limit buys or limit stop buys and so on. Most of them get taken out because all their orders are more or less exposed. Okay, now I've been trying to do this for the past 9 months to some success when I was like opening a long and a short at the same time before the news. It worked sometimes it didn't work. I got stopped out on both sides. So then I'm like, okay, why am I entering before the news? Why don't I wait for the move to happen and let the move bring me into the market? And that's where I started to use the stop limit orders instead of market buying before the news. So I'll just show here a quick example of how this could be achieved. Okay, now this is euro exactly 1 minute before the data. If you can see here in my local time, it's 16:29. The news is released at 16:30 exactly. Okay, usually when I'm looking at the chart on TradingView, I'm also looking at the clock here to determine when I need to take action. So this is exactly 60 seconds before the news. What I do is 30 seconds before the news. Okay, I cannot go down to the 10-second candles because I'm doing a replay. I don't think there is data, so we'll just do it on the 1 minute chart. And this strategy works perfectly well on the 1 minute chart. So the idea is to place a stop limit. If you don't know the difference between limit order and stop limit order, you should go and look it up. Moving forward, I will assume that you understand what a stop limit is. So what I do is I place a stop limit above the high structure on the 1 minute. So this is a structure. Now, this could work, but this is too far away from price, and we just want to capitalize on the small moves. We don't want to catch the whole move of the news. Just a small move. This way you have guaranteed, nothing is guaranteed, but more likely you will always make a win during the news, even if it's just a small win. Now, if you become a bit more advanced at this and you can program in trading stop losses, then you can actually catch more of the move. But we'll not talk about this now. I'll just show you how to place your stop limit and where to set your stop loss. So for this one, what I did is above the highs, I placed my stop limit here, and this was a buy order, not a sell order. It was a buy order. So I'll just put it green there, and I will call it a long stop limit. Okay, so basically what it means, as long as price is below this, I am not in the long. The second price goes above my stop limit, my long is opened. Okay, and the second my long is opened, I also set a stop loss using pips. So I set my stop loss somewhere around here. We call this the long SL. Okay, so if price goes above here, comes back down, I'm out. Okay, so for example, if I open a $300,000 position, that stop loss will be roughly around $100 or so. You need to account the spread, guys, because price can go here, okay, can go here, and the spread could actually here, and the spread could let you go in. That's why I put it above the wicks, not at the wicks, above the wicks to calculate for the spread. Okay, now I do the same thing exactly with my short. This could be support, so I would stay away from these 2 points. The short, I should put it below these points because price can come down here, because from experience, can come down here quickly, and then go up. So I don't want my short to open. I'll just place it somewhere here. That would be my short entry. Okay, we'll call that short stop limit. Okay, and I will also put a stop loss for that. The stop for the short will be higher, somewhere here. Okay, we'll relabel this one too. Short stop loss. So if price breaks up from here, my long takes it. If price crashes from here, dumps, my short limit will catch the price action. So when you do this, it's also good to have like a target. For me, I know that this is previous resistance. There's this trend here, so for sure I will be cashing out on the long here because it can't go there. Price could actually do this and then just rocket down. Okay, I will only capitalize on the long, and once the long happen, I will cancel my short, and vice versa. On the short side, since euro has been pumping, I know that this is a good target for my short. So I can set a take profit in advance, or I can just wait and monitor this and manually close my position. So I will show you the result of yesterday, which was October 12 CPI news. The second I move into the next candle, the data is going to happen and we will see what happened. Okay, there you go. So immediately my short gets triggered here. Okay, what I do usually in situations like this is wait at least to guarantee that I don't lose money on this trade. The spread probably right now is somewhere around here. Okay, I will just move my stop right here immediately using TradingView. Unknown caller. Okay, this way if price reverses quickly in the next minute candle, it opens green and it goes like that, my long picks it up and my short stops out at break even. Actually, you will take a bit of a loss here because if it's a strong candle, your stop will probably be triggered here. So I will lose a few dollars, but that's okay. Okay, let's see what happens on the next candle. The next candle continued going down. I just moved my stop above the wick here and I cancel my long order. Okay, and let's see it play out. Now I have structure. I can move my stop somewhere here. Another structure. I can move my stop. I can actually leave my stop here. Okay, that's already guaranteed few $100 profit. You're probably like $400, $500 profit if you open a 300K position, which is like 3 lots. Price goes back there, does not hit the stop. Now you need to account for the spread because spread could have taken you out there if you didn't calculate the spread correctly. So it should be a little bit far from this peak. Okay, continues going down. Now we have another structure, so I can actually set stop here. That adds a bit of gains. You locked a bit more gains. And then your stop hit, your take profit hit. Right there, if you calculate it on 3 lots from where you entered until here, that's almost a 0.5%. 0.5% on 300,000. Times 0.5%. That's already $1,500 in profit right there. So you can be greedy, close, okay? Or you can wait it out if you think that it's going to lower levels. But I would not recommend doing that because you're going to miss on the gains. This should be definitely your take profit. That's plenty of profits here. And call it a day. Now, how to do this? I do this through TradingView. I can show you an example now on Euro on how I activate this, but it's different from exchange to exchange, and most exchanges it's not very easy to do stop limit orders, especially if you only have 20 seconds or 15 seconds to do it. So I will show you now an example. I will exit the replay and I will go to Euro and I'll show you an example of how I'm doing this using capital and using capital.com, which is my trader, my broker, and TradingView. So I'll just close the replay and I will go to a current chart. Okay, so let's assume that this is the live current chart and the news is going to happen, and you want to put your stop here, your stop limit above this peak and your sell limit above this low. So I can change the amount here to $300,000, for example. On TradingView, you see the plus, the cursor sign here. All you have to do is just click on this, and then since it's a long, buy 300k euro stop. So I'm going to do that now, and there it is, it's set. And then I'll just put my stop loss, I drag it like that, and there it's set. And I can do for the short the same, sell euro stop and the SL like that, and there I have it. So if the price rips through here, rips through there, you already catch the moves. And when it happens, of course, you start dragging your stop loss down. That's why I like doing it through TradingView, because you can do it, as you saw, in just like 10 seconds or so. I hope this helps, and I'm working to develop this one even more using a bot. And also, it's possible to do this instead of the method I showed you here with these cursors. You can actually do it from the trade panel directly. Here, changing this one into the limit, and using the ticks, you can set a stop using this one here. You put the price, and then you put how many ticks the stop is. So you can do this on the short buy, on the long buy, on the short buy, and it will trigger it for you. A more advanced way is to use trailing stops. So if you put a trailing stop, you can decide how many pips price will follow, and when the move happens, TradingView on its own will start bringing down the stop loss as the price goes down. But this needs careful calculations and needs like a lot of testing for euro, especially with the pips, and you need to know the spread of your broker, so you know how to play this one. Also, another way is to have a bot on MetaTrader 4 or MetaTrader 5, where you can program all the news events in advance, activate the algorithm just an hour before the news. You can do it on multiple pairs. So instead of just trading one pair, you can actually go with smaller positions, but with 3 different pairs. This way, you have a better odds of making more gains, and you're catching maybe on one of the pairs you have a stronger move. Let's say you can do Euro, USD Euro, and JPY USD as an example, and maybe gold, or maybe you can do stocks, because CPI also really affects stocks, and you can do this for the US 500, since the US 500 has very low spread. It has the lowest spread amongst all the ETFs there, all the indexes. So yeah, this is the general idea, and I hope it helps you guys.